And that means we're live here on our Tackle Trading Halftime Report, a daily stock market update show where we go down through the currency, the commodity, the Forex, and even the cryptocurrency markets and break them down one at a time, as well as the news. We've got Cody, we've got Tim, we've got Noah here today. Noah, you're on mute, but I'm going to ask you the question I always do. How are you doing today?
And I'm going to give you the answer I always give. I'm fantastic. It's just my go-to.
Yeah. Well, you're feeling good. You're 1-0. The Utes won their home opener against BYU last Thursday night. Who they play this week, by the way?
Oh, Northern Illinois, smaller team that gave us fits last year. So,
Couple of patsies to start out the year, and yes, BYU is a patsy.
well, they got a good shot against Tennessee here, so I think it'll be interesting to watch.
It's going to be fun. College football back on the marks, but I got to tell you, tonight it is the NFL, and I've got my Bears gear on here today. Chicago Bears and the Green Bay Packers. We'll get into some football. Maybe at the end, I'll give you my prediction. Bears win. That's the way it's going to work out. Cody, you watch. And let's go through the markets.
Actually, I think the Bears are favored to win if you look at the lines.
So well, they're up 3 points. 3-point favorites at home in the NFL is a pickup. That's Vegas.
Bullish on the Bears. I like that.
100%.
Bullish on the
That's my
Bears.
favorite part about Chicago sports teams. You know, one of your biggest financial centers in the world. Their football team is the Bears. Their basketball team is the Bulls.
Yeah. Then you got the Cubs. You know, where do the Cubs fit in? I'm not sure.
They're only cautiously bullish.
There you go. S&P 500 breaking out today. You know, obviously positive chatter out of the trade war talk. It seems like the insiders are saying that we're going to get a deal done by October. You know, good news, I guess, but this is all just rumors. Rumors bringing the market down. Rumors rallying the market out. Trust the chart and trust what you see. Noah, that's a breakout.
It is. In fact, it broke out last night while we were on the Tackle 25, and we got to see that action live. Most of the action occurred right off the bat. So the market maintained its strength on that. And again, it is rumor, optimism. You know, they're meeting. Whether or not they get a trade deal done, we'll obviously have to wait and see. But the old Wall Street saying is buy the rumor, sell the news, right?
Yeah.
So yeah,
Noah, you actually made me money last night through your tweet because I was not watching the market. I got on Twitter, saw markets breaking out, immediately got online. So thank you, sir.
Oh, you're welcome. I felt obligated to do that because I was aware, you know, that's it's happened for me in the past where somebody else has sent me a tweet or an alert that the market was breaking up or down. It's always interesting, especially when it's like a big level like that where everybody was waiting to see if it would break out. And sure enough, here we are. Typical volume, so nothing special on the volume thus far.
Mm-hmm.
But, you know, a solid break and it looks like a solid close thus far. So, you know, go Bulls. I guess we've got some optimism out there.
You know, the markets going back and forth don't affect my systems all that much, but I can imagine a lot of traders out there being very frustrated with the back and forth volatility. If you're a Delta trader, I'm sure it's whipping you in and out if you don't have good design. You know, probably some rants are happening when the market's down 3% and then back up 2%. Do you think all this rumor stuff is good for charts, Noah?
Well, I think I'm a Delta trader primarily. And so for me, it has been an exercise in a little bit of frustration, mostly just in hedging and adjusting, like trying to switch my directional bias or liquidate positions or adjust positions. This is a clear signal for a change where we actually have a breakout above that solid resistance zone. Otherwise, I was a little hesitant watching to see if we were going to get another drop just because of the proximity to resistance.
Mm-hmm.
So it's definitely been a volatile market, and the short-term traders are probably doing okay, but the swing traders are probably frustrated as can be.
Yeah, I'm sure. Day traders, no big deal. Theta traders, no big deal. Volatility traders, no big deal. Swing trading, if you're not quick and really disciplined about executing, then you probably are dealing with a big deal. You're probably getting whipsawed around a little bit. That's why I like to have balance in my systems. There's no question about it. Different accounts for different purposes and different reasons. Delta trading, we're breaking out. There's going to be a lot of bulls. We're going to work through them one at a time. Give me the Dow, the NASDAQ, the Russell, just kind of flash fire through those. If you see anything different, let us know.
Well, let's start out with the Dow, and same song, second verse, you know, just nice breakout, typical volume above the moving averages and resistance. It's a pretty bullish signal. Not a lot of overhead resistance between this and the all-time high on the Dow. So, you know, same story there. NASDAQ, same scenario here. We've got a little bit, you know, more solid overhead resistance with that, but same, you know, breakout, modest volume, and not too far off of those all-time highs. And then the Russell, that's the laggard of the bunch. It's been kind of hanging out down there below the moving average, and it's up there challenging its 200 right now. Pretty neutral overall, but if it can get back up above that 200 period moving average, I think that would bode well for the bulls. Otherwise, it's the weak of the bunch, the weak index of the bunch.
Mm-hmm. Yeah. And it's been that way for most of the year. There's no doubt about it. We're still below those moving averages that are fading over time, but it's been a good neutral cash flow strategy. Here we are back up neutral in a range. We're going to be coming up on that new contract here in about 10 days or so. Then if you're a cash flow condor system trader, you've got to just keep executing and do it within your position sizing limits and all that kind of stuff. There's a lot of companies in the news here today. We'll get to that here in just a bit, but let's keep working through the markets one at a time. Give me the dollar. And Cody, I want you to come on in here for a minute. Cody, you've been really, trading a lot of Forex lately, and this volatility actually is.
I've been very happy lately. So mentioned it past 3 days on this show. I mentioned it during the Forex report this past weekend. This breakout, I said, wait for the retracement. It was anticipated, and we got it. It broke out. It's given us now 3 days, and that candle, which was actually a red candle earlier today, is now forming a doji. And that doji is what we're looking for. So if you're not in this is looking as a beautiful setup across multiple pairs, euro dollar cross pair being the main one. It's the most traded cross pair in the world. Trillions of dollars changes hands on that pair alone every single day. And Noah, could you pull up the euro dollar for me?
You bet I can.
The euro dollar cross pair, obviously with the euro being first as the base currency, is inverted of what we were just looking at on the dollar itself. You can see that breakdown level below $1.106, 107, and now it came down, retraced back up, touched the 20 on the wick of the day. Could you zoom in for me?
You bet.
And on the daily chart, it came right up through the 9, touched the 20-day moving average to the penny or to the pip with currencies, and came back down. So right now we're getting a beautiful doji right there at the 9. If you're not in this, there's a couple of levels obviously below today's low, could easily trigger you in on this. The dollar is behaving fantastically, and I love it when the dollar behaves. It hasn't for a little while, and now it's back to being in a good mood, which puts me in a good mood. Because good, easy patterns to trade make trading easy.
Yeah. 3-day rally here into old support and now pivoting, Noah. That's a pretty good swing trade setup if I've ever seen one. I know that day trading, swing trading, position trading, they all use charts. I'm sure the Forex report this weekend is going to have a lot of setups developing here, Cody. Volatility does create action. And as much as even back on the stock market, it might be frustrating to have that market break out if you were short or something like that. That's trading. C'est la vie. Set a stop loss, move on, go find a new trade.
But that's also why you should have multiple tools. You should know how to trade the Forex market, which is behaving more. I have not placed a stock trade this week. Haven't done it. Mm-hmm. I've been trading the Forex market because stock market's been doing what? It's been neutral up until last night.
Yeah. Yeah.
Well, there's always something to trade somewhere. Isn't that the point of having that diversity of capability?
Exactly.
Correct.
Exactly.
And different accounts dictate different things. That's why I always run theta in my retirement account because the positive theta works in almost all markets, if you know what you're doing in that regard. Let's keep breaking things down one at a time. $ DXY, obviously, we talked about that one. Let's go through crude oil and some of the other ones. Crude oil volatility, there's no doubt about it. This one is now starting to subtly change in the pattern. Now, it doesn't look like much, but that's a momentum change. And it's not a breakout yet, in my estimation, Noah, because you have too many pivots above it. Yeah. I've got a longer consolidation between about 50 and 60. Anything in the middle of there, I'm going to call it neutral. But I'm feeling it rolling into some bullishness here. What's your read on crude oil?
Oh, absolutely. Just getting it closing above those moving averages, up above the 20 or the 50 and the 200. That have been kind of looming hard as resistance zones for it. And so that breakout's really, really important. It's particularly important for all of the oil producers and oil, companies out there, because again, when they get down, towards that $50 a barrel mark, that's where their profit margins get a little bit too slim. And so, oil at $60 a barrel, you'll probably see a recovery from the energy sector, the XLE, and a lot of the stocks in there short term. But I agree with you, Tim. Not full blown bullish, but it's neutral with a little bit of a bullish uptick there. And I think that's all driven off of that same optimism that, hey, all the talk of recession may not come to fruition. They may get their trade deal done, and that means production stays high.
There may not have been a phone call 3 weeks ago or 2 weeks ago. There was a phone call this morning. The market likes it.
There you go. That is true. And when you have a risk on environment, that means crude oil stocks and a lot of these different products, they're all going to move together. Crude oil is following along right with the stock market. I'll tell you what is not, though, is gold. Let's get right to metals because gold is down. And it does make sense here, guys. I mean, money's flashing into risk. It's flashing into areas that they've been avoiding for a while. So it's got to come out of somewhere. Markets are pretty common sense sometimes, most of the time, I would say. Gold down here, but still very, very bullish. Does the size of the candle or the volume concern you if you're a gold bull?
Well, that is a bullish or bearish engulfing candle, excuse me. And you also have kind of a megaphone pattern in there where if you look at it, you can see the ranges were engulfing as well. And so it could be a short-term reversal. But the way I look at it is they've showed us their hand. You've got this breakout, the strong rally with lots of volume behind it. I think any dip on this is profit taking and an opportunity for the buyers again, because there's still that rush to gold. There's been an increase in demand. And I think the fear and uncertainty have driven that. Now, if the market, recovers and stays strong, you might not see the gold rally continue. But I think that again, the volume here, the institutional, involvement in this, it creates a big opportunity to buy those dips. So I'm watching that. Today's sell-off is, I think, profit taking.
Mm-hmm. Yeah, probably some profit taking. There's no doubt about it. There's been profit to be had in the metals market. Silver is down 3.5%. Of note, there's no doubt about it, gave back about 2 days of gains and just kind of let that sink in. Not that big a deal. You see the volatility in these products. A couple of days of upward movement on Monday and Tuesday, or Tuesday and Wednesday this week. Obviously, we're down back here today on the SI contract. Platinum down, copper back up on the trade news, palladium still up as well. As you look across the metals market, I still think gold is probably the safest place to be playing in the metals. But obviously, there's a lot of opportunity. I had a question on the Clubhouse today, Noah. How do you play platinum? How do you play palladium? How do you play these other ones? There are ETF products, they just might not have options and they might not be liquid. Give me an analysis on silver, and then I'm going to run through a couple of these ETF products and we're going to talk about them.
Yeah, same story here. Strong run up. This one a little bit more parabolic in that move up, and then today's sell off. Heavy volume, wiping out 2 days worth of gains, but I see that as profit taking. Mm-hmm. So same thing where you got increase in volume on the breakout and the runs. And I think the dips these are opportunities to wait for pretty good looking bull pullbacks and wait for confirmation. You don't have to predict, just anticipate and watch for those pullbacks to set up.
Mm-hmm. So let's start with a couple of these ETF products, Noah, and we're going to go through a few of the benefits and also some of the negatives if you're going to use them. GLD, we talked about gold. The ETF version of gold is very liquid, very popular, very tradable. I don't think there's any drawback to using the ETF versus futures besides the leverage. Do you trade GLD?
I do trade GLD from time to time. The one thing I don't like about GLD compared to the futures is just the gaps that occur because it's an ETF and it doesn't trade around the clock like the futures do. Mm-hmm. But otherwise, it's got options. It's liquid. It's a great instrument on average. And I think it's ideal for the beginners. I don't think the brand new beginner traders should be out there trading gold futures to begin with until they understand that leverage and understand how to manage the risk on it.
Correct. Yeah. SLV. Now, SLV has options, very popular, just not a very good covered call return. There can be some drawbacks on that. So the way that you trade it, though, it's very much just the same chart as you saw on the SI contract, just slightly different pricing, just a little bit adjusted. SLV is a very popular ETF. But then you get into some, like go to the trade tab for a second on SLV. Both SLV and GLD have leap options, short-term options. There's great ways to trade them. But then you get into like the platinum, palladium type ones, and they're not as liquid. PPLT for platinum.
See, these are symbols I am not even that familiar with. It has no options.
No options.
And I've never traded them. So, these ETFs, I think I'm always cautious on ETFs that are just illiquid and don't have options.
Yeah. And you can get exposure. Obviously, you can now buy the ETF and get exposure in the platinum market, but you can't hedge it or protect it directly through the options market. So you do have limited choices here, no pun intended. But it is a product out there. You know, a lot of people saying, well, I can't get into the market because I don't trade futures. That's not necessarily accurate. There are products, and then like PALL, you know, palladium.
PL, what's the symbol again?
PALL.
PALL.
Pal.
Now, you look at the chart, and from a long-term perspective, it's been one of the most bullish instruments over a couple-year period in the metals market. But then you go to the option tab, and you're going to see the same kind of thing. There are no options. So are there ETFs available out there? You bet. And there's a lot of different ways you can play the commodities market, Noah. You know, when you have students or you have our community out there asking, how do I get exposure to palladium, platinum? Do you think these kind of ETF products are viable?
Well, I mean, for stocks themselves, I'm sure they're liquid enough to buy some shares and stop loss. My take personally is I always like having options. If you'll pardon the pun, when you trade instruments that have good options, it gives you more options.
Yeah, I'm with you.
More choices on how to manage it. So yeah, I mean, as far as that, you know, buying the instrument goes, I don't have a problem with it. Just position size and stop loss. You don't have the options to buy, you know, put insurance or to sell covered calls. So, you know, it limits your prospects. And if you want to play in the metals market, me personally, I'm going to lean towards the ETFs that do have options.
Yeah. Yeah. There's so many different ways to trade, like we've been talking about all day, you know, through Forex, through commodities, through ETF products, you name it. I love metals. We all have been talking about metals for a long time. Whether you trade futures or ETFs, you got to make your own choices out there. Obviously, you're the trader. Metals are down here today on a risk-off attitude. Copper's up, palladium's up. Let's talk a little bit about some of these Forex pairs. Now, I know we talked about the dollar, the euro dollar cross pair. Bring up the pound dollar, though, because this one is a very different pattern than the euro dollar. And in fact, a lot of positive chatter out of the UK with this no Brexit type deal kind of being blocked. Boris Johnson, his initiatives, they're not exactly flying through the parliament there. Noah, when such a product is so news driven as this one has been, is it an avoid for you?
No, it's a opportunistic scenario for me. It's like, you know, I keep an eye on them to see if I can take advantage of the news, right place at the right time, but it's short time frame only. Like you don't carry overnight because, you know, you don't carry when you can't be there to babysit it because the market can move off of the news. While if you're sitting in front of your computer, no problem trading it. But, you know, the minute I have to step away, I'd rather close out and not have to worry about some, you know, I don't know if Boris Johnson tweets, but he should.
Yeah. We should get him a Twitter account. I'm not sure if anybody can ever Trump, though. There's no doubt about it.
No, you can't Trump.
No, you cannot. Cody, for the pound dollar for you, I know you're trading the euro dollar quite often and whatnot. The pound dollar, is it a stay away for you with all the Brexit news? Or do you
I'm actually a stay away unless I get something really enticing. Something that I could play, and then I'd still play just like Noah said. I'd probably just do it on a daily swing. I don't think I would hold this thing overnight anytime soon, especially with the pushback between Brexit and now that it is front and center again. It's really hard to anticipate what's going to happen, and God forbid Boris Johnson did have a Twitter, because then it would be even more volatile. But yeah, it's a stay away from me. If I get like a tiny candle, maybe something intraday, play it off the 200, but no, not right now. It's a stay away.
Yeah. Bitcoin next /BTC, if you will. And the Bitcoin markets are doging today. Markets are going crazy. So why wouldn't Bitcoin do nothing? Of course, it's kind of counter the market in terms of volatility recently. Stuck in a range neutral. I don't really see anything else there. Let's move on to some individual companies in the news. And let's start with Slack. WORK, actually. I have not traded this one yet because recent IPO, first earnings, I've got my own personal rules on that. It has to come through earnings and actually be around for a couple months before I'll start playing them. And yet, generally, I even like probably 4 or 5 or 6 months of activity here, Noah. We don't trade IPOs, you know, we don't trade the initial day on the IPO. But at what point are you willing to jump in and start playing something?
I agree with you, Tim. After you've seen an earnings announcement, you've got some history to work with. When the options come online, when you can actually short sell the stock, because a lot of those IPOs, they don't allow short selling.
Yeah.
So I'd like to, again, have my full arsenal of options when I want to go trade that. And I wait till I see the personality really pick up. And I think most IPOs are overvalued. Just kind of the nature of the beast. They tend to be overvalued. And so the general pattern I've noticed over the years is they might spike a little bit at first, but they tend to sell off for the first quarter or two. And then after about 6 months or so, I think they become tradable.
I love so many of these companies that are IPO in the last couple of years, though, and I am getting excited about many of them. I got to tell you, Slack is a company we use internally, and I have a good friend, Steve Andrus, who Noah, you know very well. He's one of your comrades as well. And Steve always says, you guys have been doing market research your whole life. Work with the companies that you're interested in or that you've got good value out of. Noah, we use Slack as a team internally. And they're a good company. They're a reliable company, and one that I see a lot of potential growth in. Now, I'm not dug into their fundamental numbers. I'm expecting high PE ratio, maybe even a negative PE ratio, all that kind of stuff. But in terms of an IPO, I'm excited. Zoom Technologies, Zoom IPO'd earlier this year, right? Then you've got Uber and Lyft and all of these tech names at the top of a market coming in with negative PE ratios. It might be an indicator to those who are, looking to always sell things off. But I'm interested in some of these companies. Out of the ones I just named, Noah, which one do you think has the brightest future?
I like Zoom.
Yeah.
Uber and Lyft, I think, are still kind of down underwater right now. Like the trend's still negative. They still haven't shown me the money. So, and I think their business model might need to be sorted out a bit. Love the product, but I think they're fundamentally not as good. Now, Zoom, I like the product, and they're already turning a profit on their first quarter. So here we are, Q2 results should be coming out soon, and volume starting to pick up. It's very, very consolidated right now. Like it hasn't really picked a direction, but when an IPO actually goes up instead of down, that's a good sign for me as well.
You'll notice that we didn't mention Beyond Meat, which, by the way, is I'm a little bit concerned about this pattern here. Kind of compressing.
Well, the thing I found
is out of it. That's what it is. The hype is gone. It's no longer headline news. Now it's the only people who are really still trading it are people who are trying to look at it technically or fundamentally.
Well,
they're not as excited.
The put options on it just incredibly expensive compared to the calls, and so that's one of those things. And the options have wider spreads right now still. So I haven't actually traded it myself. I've watched it and I've watched other people trading it. I think the commentary is interesting, but I've not tried the product and I really don't have any intentions to. So,
maybe I'll get some Beyond Meat wings or burgers tonight for the Bears game.
The vegetarian's so cool. Why do they keep trying to make everything taste like meat?
I'm not going there. Listen, I am not going there. You think politics is controversial? Talk about diet. I'm going to tell you, absolutely not. We're not doing that today. The semiconductor sector is going crazy here today. Applied Materials, Intel, Texas Instruments, you name it. NVIDIA is up 5.5%.
Well, I mean, look at the semiconductor holders, Tim. Like the whole sector's rocking. And I think that's kind of a pick 'em, you go through and pick your favorites because that whole sector is showing great signs of strength. Very sensitive to trade war talk and whatnot because a lot of those semiconductors out there. But boy, that's a nice solid pop. And so when I see, an Applied Materials popping up and, giving a solid run or an Intel, popping up, same story here. You're seeing strength across the industry. I always like trading in that sector.
Yeah. And some that are really showing me a lot of leadership, NVIDIA. Look at it, NVDA, if you will. 5.5% up and breaking out of a long-term kind of consolidation here. You're pressing against resistance, Micron, MU, and these are all trade sensitive type deals. Trade war positive. You're going to get these international companies. Now, Micron's got earnings coming up a couple weeks, but that's a beautiful breakout. Semis lead the market. Noah, we heard that 15 years ago, and it's still true today. When semiconductor stocks are running, that's usually a good sign for stocks. Why is that, by the way?
That is a good question. I don't know. I wish I had a better answer for you.
Well, I was always told the logic made sense to me. It's because all the different components and the chips and the little details that go into the industrial equipment and computers and technology that people invest in, they're going to be bullish if we're, strong and investing in infrastructure.
It takes me back to the old stock market saying, I think this is probably the real reason for it. And I do know the answer. It's just like you say, if there's going to be a war, invest in the company that makes the bullets. So if you're going to have a technology, war battle going back on between, Samsung and Apple, et cetera, rather than pick size, just go pick the processor maker.
Well, there's two parts to that. You own the bullets and the band-aids is how it goes. You own the bullets and band-aids during a war.
Yeah.
Wait, I've never heard that phrase.
You've never heard that?
You own the bullets and the band-aids.
Yeah, so basically, if there's going to be a war, people are going to need the ammunition and people are going to get injured. So you own the production that helps fuel the war, and you own the back half of what's going to be needed after the war.
We're talking about chips, kid.
No, we're talking about a trade war. We're just extrapolating it out, right?
It's a metaphor, Tim. Have you heard of it?
NVIDIA makes graphics cards for like Call of Duty. I guess we could pull in some more.
Hey, you're not playing Call of Duty unless you're playing against kids, in the middle of the night somewhere.
No, but the metaphor is that, you don't necessarily pick sides in the war. You own something both sides are going to use.
Yeah.
That's the point of it.
Well, we did a podcast a while ago. I'm giving a hard time, but war is bullish. There's no doubt about it. But that's neither here nor there. Just keep working through some of these companies one at a time. I'm looking across the market. Goldman Sachs had a bunch of news here today as well. A lot of their insiders. Cody, what was it? They're leaving for other opportunities. Some of their traders. I saw some headlines on this thing.
Let me see. I put it in my notes somewhere in here. I got to look into it. But basically, you have some people that are abandoning ship. They were using the headlines of the smartest guys in the room, basically saying that the smartest guys in the room are leaving the room, and there's a reason why.
No, I think what that was is the IPO for. They don't want to be a part of the IPO for Aramco. So they're not losing talent. I saw the headline as well. I know what you're talking about now. I think they're just pulling themselves out of consideration of listing the IPO for Aramco because the pricing is off. So that's not a good sign for that. I'm going to have to dig into and get clarity on that. We'll talk more about that tomorrow. CVS was up big, 2.2% today on a bid. They had a judge as finding came out and said the company did not run afoul of antitrust issues with Aetna. Whenever you get news like that, obviously it can impact the stock. I don't usually buy on a gap out doji with no follow through and no volume on a news story, Noah. That's not exactly a breakout that's going to inspire you. Not all breakouts were created equal, were they?
No, absolutely not. And I absolutely agree with that. A breakout on a gap and a doji when it's already short-term, like swing range up, probably not your best signal. But I do like that it's back up above all the moving averages. It was back up above the 200, and you're seeing crossovers between the 20 and the 200. And it, again, this is one that pays a dividend. I kind of see this as a covered call play more than anything, and seeing it come back up and trading pretty much between its big major support and resistance zones, I think gives you a candidate for some covered call. You got earnings coming out here in the future. So it could be a volatility play, but I think it is a strong sign that it's back up above the moving averages, but it's not a really bullish, growth candidate for me.
Yeah, I agree with that. I've been kind of a stay away on CVS for a bit now. It does show some strength here. Got to respect the chart, but it would not be a buy for me personally. A lot of companies with earnings here tonight. We mentioned Zoom earlier. They actually have earnings tonight after the bell. Good fortuitous kind of reference there. DocuSign, CrowdStrike, PagerDuty, which I do not know that company, but I'll tell you one that I do know, which is Lululemon, LULU, one of the bigger retail names out there. Good volatility potential play. This is kind of set up when you're stuck in a range like that on a big stock. I like bi-directional plays. I was doing some mentorship last week with Justin out there in Atlanta, and I was teaching him in the morning I do Delta, after the bell I do Theta, and then after the halftime report, I do Vega. I have a very, very specific daily routine that I approach it. So when I'm done with the report here, I'll take some of these earnings plays and actually go out and price them. Lulu will be one of them. Noah, this is a good company to trade on. What are you thinking here? Maybe an inverted fly, debit condor?
I like both those strategies if you think it's going to move. Got to get a look at that high implied volatility. This is a picture perfect example of the volatility cycle.
Yeah.
When you look at it, like that's a textbook example of the volatility cycle. So you got high implied volatility. This is one I might consider doing the short strangle on just because of the volatility crush. That's
sensitive.
A more advanced strategy. It's open-ended risk graph, so you have to.
And you're right, 100%. There's nothing wrong with that. I don't mean to cut you off. I apologize. I want to get your thought on this.
No, you're right.
When the IV is over 50%, even if I do reduce the impact of volatility falling, I'd rather do a super wide-legged iron condor than a short strangle.
Yeah, that or a diagonal or something where you have your risk controlled.
Yeah.
Yep.
Yeah, risk and margin and the whole thing, because, companies like this, when you're dealing with high implied volatility stocks, yes, they should crush. But one of the reasons why they're high implied volatility stocks, because the market doesn't know how to price it perfectly.
Yeah, and they've got that market maker move priced out at $17 right now.
Yeah.
So they're expecting some movement out of it. And again, when you get that high implied volatility, that's priced in there for a reason.
Cody, write down Lulu. We'll talk about it tomorrow. We'll take a look at it, see what happened. I'm thinking a bidirectional trade. I'm sure there's some way we can play it. I'm going to price out maybe an inverted fly or a debit con after the bell. That iron condor, maybe. No, I know there are times where you'll trade both. You'll trade the inverted fly 10 days out, and you'll trade the short strangle or the condor 45 to 75 days out, right? Yep. Yeah, there's different ways you can play
Lots of ways to go about those. And that's just a good example of that volatility cycle.
Volatility abound. And guys, there's a lot of stocks on our stock report, option report. We'll highlight those here in just a few minutes. But that is the juxt of our market skyline. We now got a little game for us here today. And
before the game, I'm sorry. I'm laughing at my own humor. Noah, could you pull up that link I just put in the chat?
Maybe I can. Hang tight.
Yeah, it just came to me when we were talking about it, so I went ahead and just created a meme for it.
Oh, that's my Texas barbecue kid. Listen, my brother Matt, his wife and most of his family are vegan. So I know how this can inspire some real all
right, come on.
That's funny. Listen, my uncles were butchers. I'm a meat eater. I'm going to be grilling a steak tonight for the Bears game. Probably going to have some chicken wings, the whole thing. Definitely not that type of vegan. So I'm with you, Cody. I'm with you. Barbecue time, my friend. That's pretty funny. What's that guy's name? Ron Swanson?
Ron Swanson. Yep.
Is he the best Ron of all time?
He's got to be. He's one of my
He's got to be. Yeah, that original meme was, the only thing I hate more than lying is skim milk, which is water that's lying about being milk.
Well, now hold on. You have Ronald Weasley, okay, from the Harry Potter.
No, Ron Swanson still takes it.
Nah, you've got my boy, and you guys might not know this guy. You got Ron Bennington, who's a radio personality, who's one of my favorite people on the planet. You have Ron Burgundy from Anchorman.
Ron McDonald.
Ronald McDonald. I don't know, man. Who's the best Ron of all time? I think that Ron Swanson might be up there right now just because he's currently on our Twitter feed. That's what it is. All right, Cody, we got a little game here we're going to play. Set it up.
All right, so we're going to do a little bit over under. I have right here, I'm going to be taking down the notes on Noah versus Tim. This is going to be, we're going to set it up today and we're going to play it out. We're going to do an over-under on the markets, crude oil, gold, the dollar, and then one final one that I thought of last minute. And you know what? We're going to do this out till January 1. All right.
So we're essentially have to call whether we think it'll be over or under of that product on January 1st.
Yep.
Okay.
Yep. And then we're gonna have to come back to this and say, you know what? So I'm gonna put a reminder on my phone. Let's see who's gonna take the cake. Noah, Tim, and just like the other game, I'm gonna make you guys have to take the opposite side.
By the way, James had a great joke in the chat. Didn't think Lulu had anything wide-legged. I don't have any.
Well, what did I remember their CEO saying something like that, getting in trouble. Like, our pants aren't made for everybody or something like that.
Say la vie. All right, Cody, set it up. We're good. Let's roll.
All right. So right off the bat, let's start with the market using the S&P. Let's use SPX for this one, not the futures. So we're going to do over or under current point right now, January 1.
Over under current price?
29.72. Dude, I think that's you have to instinctively take probability to the upside. I'm going to go first. I'm going to call it over. We just broke out. I have only the information in front of me right now. I know we're going into seasonality. September and October, some of the worst months in the market history. We also have slowing global growth, and we have Alan Greenspan coming out yesterday and saying we're going to be negative interest rates at some point in our future. I thought that was very, very telling. And in fact, that interview he had with CNBC, did you guys see that?
I haven't seen it yet, but I read the headline.
The Greenspan one I did, which it was actually hard to listen to him. He needs to speak up, but I know
the old man. I'll tell you, I understand that.
But the fact that he's calling for negative interest rates really scares me. I'm glad he's no longer. I'm glad he's the former chair.
Well, he's not calling for it. He's saying that's where we're going. He says it's more of a prediction. Yeah, he's not saying that's a good thing. I don't think it was an opinion he had. It's just that's where we're heading because the globe is all going into negative interest rates. I'm going to say over. I'm just going to call it over. The market has been going up all year. The market is currently bullish. The market, it just broke out. I'm giving it an over.
Noah, can you take the under on that one?
No, I can take the under, and it would be easy. See, because the problem is Jay Powell's so weak that he won't give us the rate cuts we need. And that puts us at an unfair disadvantage. And so the market's going to be down, but that's good for us, because I don't know, I could see that going the other way. If trade deals don't get worked out, I can see concerns and fear gripping the market a little bit. So I'll take the under.
All right. Noah's got the under. Tim's got the over on the market. Let's move on to oil. So oil's a little bit different. It could go lower. It could go higher. It is in a neutral pattern right now. Over under. Let's go over under. Let's call it. Actually, I like the current price right now. It's in that wedge. Over under current price.
All of the logic I had from before. I know Mark thinks I've been saying that oil is bearish. I've not said that. I've been neutral on oil. But if we're in a risk-on environment where
actually, let's push it up a little bit. Let's go over under 60.
That might be a little hair different. That's 6% higher. 6% in the last 4 months of the year is not a lot. Seasonally, oil does not do great when we get out of driving season. Man, I so badly want to say under, but I'm going to say over. Just a risk-on environment. If we are going to be moving into bullishness and we're going to see some upward mobility in stock prices, which, by the way, I would change my opinion in a heartbeat if the market pattern changed. That's the way I trade. I do not get stuck on an opinion, but I'll just give it an over here so that Noah has an easy argument against me because I know he wants to say under.
Well, I'm going to say under. My seasonality, of course, does not predict, but tells me that it's not a strong time of year for consumption. Plus, I think we still have a glut of inventory, so I'll take the under.
So, Noah, if you were going to take the under, what price do you estimate it's going to be at?
I don't know if we're going to dip below 50. That's a strong line in the sand, but I don't see it going under 40. So, I think that somewhere around the 50 to 40 mark.
So what you're saying is I can take Gino's method and just start selling some puts below 40 and I'll be all right.
Well, that's what Mark does too. I mean, Mark does deep out of the money puts. Gino does. A lot of traders, they bet against where something won't go, right? And that's a smart approach if you're just looking for cash flow, no doubt about it.
Absolutely.
Right, next.
Moving on to gold. So gold, if the market's going up, gold should go down. So each of you have taken, so Tim, you've taken the over, so that would actually mean you'd need to take the under for gold, right?
Well, give me GC, okay? It's an asset. I'm not betting against gold. And by the way, I think let's give it a different price here.
All right.
And in a parabolic uptrend. So how about this? Over or under, and Cody, I'm going to bring you in on this one as well. We don't have to just take the opposite side. 1,600.
Right, okay, just discussion on this. Over under 1,600?
By Jan 1. 75 points from here, Noah, is another 6-7%.
Oh, I'm taking the over.
Yeah.
I think we're going to be testing those all-time highs soon enough.
4 months.
1,600, 4 months. I'm going to take the under on that one. And the reason why is from that weekly chart right there, I can see this thing coming back down to 14 to now test that major support, which was major resistance within the next 4 months. And then if that happens, then it's going to have to come back and get back above 1,500 after that. So I'm going to take the under for that reason.
For some reason, I just keep thinking about Gollum from Lord of the Rings right now. Just my precious here. Everybody's going to take the over if you're a metals bug, Cody. I understand why you have that opinion of the under potentially. You know, Matt would be over. Pete Thomas would be over. I'm going to say under. I'm going to say under, and I'm going
to take an under. And by the way, because I'm a nerd and because I took my honeymoon in New Zealand, I came back with
the precious
from Middle Earth itself.
Can I share with you guys a deep dark secret of mine?
Sure.
What's that?
You're afraid of spiders?
No, one of my
If
nicknames.
you've never seen Lord of the Rings.
No, you're talking about Lord of the Rings, though. No, I used to love Lord of the Rings, and when I was a younger man, I had really curly blonde hair, and they used to call me Afrodo.
Oh yeah,
that's one of my great nicknames, Afrodo, because I'm a hobbit. So you know,
you're not a Frodo.
You could have kept that one to yourself.
You're more of a Sam.
Sam Gamgee, right?
Yeah, you're more of a Sam, loyal friend there. Always, kind of saving the day.
Sam the brave. Samwise the brave. Come on now.
I'm going to say under, and I'll give you a very simple reason why. The average return annually on gold for the last 25 years, 6%. Okay. Now, I know we've had bull markets and bear markets. We have some very parabolic moves to the upside and the downside, but we've already taken off from about the 1250, 1300 mark, and we've already gone up 300 points. You know, we're up 22% year to date. Another 6-7% is likely, but given that, even that cushion in there, it could rally above it and then still have a sell-off at the end of the year. I'm going to give it an under. And
that's from a technical point. I'm giving it the under.
Yep.
All right. So let me mark this down. We got Tim under.
By the way, Matt is going to give me relentless.
Oh yeah, you will.
Yeah. For that.
Noah over.
I also just read Jim Rickard's book, so I'm way over. I'm gold at 10,000.
We could have said gold 5,000.
Noah?
What?
Did you finish the book?
I have finished it.
Oh, I'm about halfway now. I'm really enjoying it. Really enjoying it.
All right, next.
I still took the under. Let's go $sign DXY.
So I got the weekly chart here. What are we doing price range wise? Go to the
well, a lot of stuff that can happen between now and J1. We have interest rates for multiple banks. We have trade wars going on, and of course, the dollar being, the largest traded currency in the world. We have a lot
$100. $100 on the index, Cody.
$100. Whew. I hope it goes over. I by J1, I'm going to take the under.
This one bores me to tears. I got to tell you, gold I could talk about for 6 hours. Talking about trying to figure out which Federal Reserve and central bank is going to kill their currency the fastest and the most. That's a great discussion, but it's going to impact other markets more than it will impact the dollar. I mean, the dollar could just stay flat. I'm going to say under. The volatility in the Forex markets is like 20% of what it was when we started, Noah. Yeah,
well, and I can't be over on gold and over on the dollar. That just doesn't make sense.
Yeah, but gold can rally with the dollar rallying it has this year. The dollar actually has gone up about, $2.50 on this index while gold has been bullish. It's an interesting environment we're in. So you're under, I'm under, Cody, you're under.
Yeah, we're all under.
That probably means it will go over. So that is the way it works. Next, last one.
All right, very last one, which we're going to need some help of our crew on this one. Because I'm going to say, guys, are we going to be over or under 6,000 tackle trading YouTube subscribers by January 1st?
Ooh, that's a good question. I'm a data-driven guy. We have 5,050, I believe, somewhere around there.
And we're currently growing at a rate of about 50 a week, which is an upgrade. Since we've added these ads, we've been growing a little bit faster. Okay. So that puts us right about 5,900-ish, but with the help of our students getting the word out there, we could easily break 6,000. So over under 6,000 by J1, guys.
I love it.
Give it over. That means you have to give it a like and a share.
Yeah.
And tell
everyone is giving that over. You need to share that with some friends.
You want to get in on this fantastic channel and all the great humor and content.
Yeah, I'm not sure it's our jokes.
Our content's going to push us
better
than our humor.
Oh,
A good college try, you know?
yeah. I'm going to say way over. I'm going to say we're going to break that and beat it, Cody, because we're going to even tap into something more unique and interesting, and who knows. And plus, everybody out there is going to like and share these posts so we can get the word out and bring people into the investing community. Hashtag Team Tackle. I like that one. Very, very good game. A lot of fun here today, guys. Couple of quick stocks I want to look at. I'm just going to pull one from Stock Report, one from the Option Report. Take a look at WTR here, Noah. Water. Good Aqua America bullish trend, very conservative dividend paying company. We like putting those kind of companies on a stock report. You can see the bullishness. That's from last weekend. American Tower, AMT on the stock report as well. Same kind of deal, down today, back into a moving average. These REITs and these utilities, Noah, on a day where the market has risk on, they usually have a little pullback, right?
Yeah.
But they don't necessarily swing trade the same way like a tech stock is going to. Why is that?
Well, I mean, they're a lot more subdued. You look at, your utility companies, they're regulated. They can't just raise, prices, et cetera, et cetera. And they are that defensive sector type stock. And I think, when they pay a dividend, the idea is you buy and hold them. And the people who own those aren't necessarily the hyperactive trader types. So, whereas you look at other instruments, the swing traders and the day traders influence price more, but those utilities, occasionally you'll see swing traders and day traders in there, but for the most part, I think it's the buy and hold crowd.
Yeah, I would agree with that. So many stocks from the option report that are triggering and showing bullishness here today. Just take a look at Akamai. Akamai broke out yesterday. That's why you've got to keep updating and watching your triggers, AKAM. Chicago Merck is up here today as well. But probably the one that just took off this week is Western Digital, WDC. If you take a look at WDC, you'll see this breakout and just barreling forward with those semiconductor stocks. If you're a pro member, you already know this. The reports are a big part of what we offer. We have content, we have webinars, we have courses, we have shows, we have the Traders Lounge. But those weekend reports are jam-packed with value to kind of give you ideas throughout the week and all that kind of stuff. Noah, I believe, are you on one of the reports this weekend?
I think I am.
I believe I am as well. Yeah, and Cody, you do the Forex report each and every weekend. Guys, scouting reports, make sure you go back and double check them, get your watch list ready for the entire week and use them. And one last thing I want to share with you, Noah, and our community out there. I got to tell you, we've got a Team Tackle, member here. His name's Jarrett. And he sent me a private message in our clubhouse, which I loved. And it came in the middle of the show. I quickly glanced at it, but I just want to mention it here. He says, I've been watching you guys show for a little bit now and decided to join the pro membership to learn even more. I look forward to continuing gathering up as much information as I can from you guys. And Jared, welcome. If there's anything that every member in our community will tell you is that when you communicate, you reach out, you put your butt in a seat, you put the work in, we're going to be there to help you and support you. Tackle Trading is a pretty simple company. We do a lot of different content. We create a lot of support. We create a lot of ideas for traders out there who want to do this on their own. So welcome to our community, Jarrett. And everybody, guys out there, say welcome, Jarrett, Jarret. I think that's pretty cool. If you're not a pro member yet, guys, sign up. Cody will put the link in the chat. He'll put the link in the description, all those kind of things. Cody, anything I miss as we wrap up here today?
The only thing I have to add is we have Gino tonight teaching Theta Tap on the Cash Flow Club. So everyone loves Gino. He's one of the favorite coaches of our students. So make sure you sign up for that 15-day free trial for the pro membership so you can get to the show tonight and check out what Gino has to teach you about Theta. He is the Theta King. He is the Theta Maker. He has that role for a reason, and he's teaching tonight Theta Tap. So make sure you get there and watch that.
Yeah, Theta. I still am going to approach the market with Theta. I know we broke out here today. I'm not going to chase it like a little puppy, Noah. I'm not going to just go out and buy everything, obviously, because this is news. We saw that. You can go back to the S&P. One last thought here, maybe one last little mentoring thought. As it was not probably as bearish as you might have thought when it gapped down and broke down on the news, it's not as bullish here either. You got to trust it. You got to adjust it, Noah, but it's just ever so subtle. It's kind of like driving a car. You never crank the wheel hard left. You just kind of subtly move it to keep your wheels on the road, right?
Yeah, and again, they think this is all speculation right now based off of news and optimism. And I think there's still a great deal of uncertainty out there. So, if anything, that oscillating range taught us is the market is not certain. The breakout here shows some optimism and some confidence, but it's just based off of that. It's just based off of optimism. So, I think theta would be the best way to approach the market, and, a neutral portfolio, cash flow focused.
Yep. Guys, we're done today. We'll be back tomorrow, Friday Fun Day. By the way, tomorrow we're going to be doing the coach's mailbag. So if you have a question you'd like us to answer on the show tomorrow, I want you to email team@tackletrading.com, and we're going to pick 3 or 4 of them to kind of feature on our show tomorrow at the back end of our show. So we will be back tomorrow on Friday. Good job, Cody. Good job, Noah. And great job, team out there. We're out.